It's so important that we understand the features of a mortgage when we're picking the right one for clients. One of the features that we highlight is the exit strategy. There are certain scenarios that you may not anticipate, and we might have to pay off that mortgage ahead of schedule. Let's take a look at the variable rate mortgage first and foremost. For a variable rate mortgage, you will pay 3 months interest if we break that mortgage ahead of schedule. Now, how to calculate 3 months interest is this. Let's assume that we have a mortgage of around $700,000 and our interest rate is prime less 0.9. Right now, prime is 5.95, so effectively we've got 5.05% interest rate. So we will multiply that interest rate with $700,000 and divide it by 4 to give us 3 months interest. So for this specific example, it's $8,837.50. Now, a variable rate mortgage is replaceable or portable for some of the lenders. So it doesn't necessarily mean that you have to pay it off and break that mortgage, because you can technically replace it with another mortgage on another given property. Another product is the fixed rate mortgage. Now, with a fixed rate mortgage, a little bit slightly complicated. It's the higher of 3 months interest, or what's called an IRD, which is interest rate differential. Now, if you have a term that's over 5 years, let's say a 10-year mortgage, and you've already passed 60 months, technically the penalty will be 3 months interest. Now, calculating 3 months interest is the same as what we did earlier. Now, there are two ways to calculate interest rate differential. Let me illustrate how they are different for a bank lender calculation and a fair IRD lender calculation. Now, here's an example. So let's say we committed to a 5-year fixed term today. Let's say it's around 5.44%, and that discount compared to the posted rate is around 0.9%. So it's a 5-year term. And fast forward 2 years from now, let's say our balance is $700,000. That means on a 5-year fixed term, 2 years from now, there's 3 years remaining. So our contract rates effectively is 5.44. Let's assume that 2 years from now, the 3-year posted rate is 4.54%. So that would be the same for a bank lender and also the same for a fair penalty lender. So what I did was I discounted 1.25% from today's 3-year posted, projecting that for 2 years from now. Now, the discount on the posted rate originally with the bank lender is 0.9%. Now, the way they calculate the interest rate differential amount is using 4.54% less the 0.9% discount, and basically compare that to the contract rate of 5.44. The difference between the two is 1.8%. So 1.8% on the $700,000 mortgage, and then multiplied by 3 comes out to $37,800 for the next 3 years of interest accumulated based on 1.8% annual interest rate differential. Okay? Now, for a fair penalty lender, we use basically the same posted rate of 4.54, but let's assume the discount level is around 0.2%, because that's typically what it is for a 3-year fix. So we're actually using 4.34% and compare that to the 5.44%, and that gives us 1.1% for a fair penalty lender. So the fair penalty lender IRD would be 1.1% per annum, multiplied by 3 because there's still 3 years left, and that effectively is $23,100. The difference between the two is around $14,700, and that is technically the cost saving potentially you would have if we went with a fair penalty lender versus a bank lender. So it's not always the case that a bank lender is advantageous. Obviously, bank lenders will have, multiple branches and all that kind of stuff, but don't think that you always have to be with the bank, because there are certain scenarios, all else being equal, with the same product, same interest rate coming in, you'll actually have potentially savings on the exit side of that. Now, obviously, like I said earlier, for a fixed rate, it's the higher of 3 months interest. versus the IRD. Now, 3 months interest for this specific scenario is around 7,595, but we're calculating, or the IRD will be higher than that. So you'd either pay the 37,800 if we had a bank lender, or you would have paid 23,100 if we have one of the fair penalty lenders. If you need to understand this a little bit more, if you have specific questions, don't hesitate to call me or my team. Have a great day.